We got a good one today. We have been talking about like how to get plan for this year. We give these like quarterly market outlooks. Today, we're opening the kimono on the plan itself. We are giving the 2026 JWB Playbook. This is important for a couple of reasons. One, there is no company that thinks about the macro economy and makes decisions across so many things that have to do with the macroeconomic factors of the real estate market in Jacksonville as JWB does. So if you are somebody that invests with JWB, you want to know about that stuff, right? You want to know the strategy of what JWB as investors are doing, whether or not you want to do the same thing they're doing or not. If you are an investor that doesn't invest with JWB, you're just a real estate player in Jacksonville, you want to listen to this because, again, proprietary data, insider strategy of one of the most successful companies in the space locally here. And if you're part of our community, you're also going to want to hear about the inside details of the summit we got coming up. Welcome, everybody, to the weekly edition of the Not Your Average Investor Show. I'm your host, Pablo Gonzalez. With me, as always, the man that I affectionately like to call GC because he's got the genius concepts, knows how to generate cash flow, is a great co-host, and his name happens to be, total coincidence, Gregg Cohen. Say hello, GC.
Hello, everybody. Fantastic to be with you. Pablo, you are bringing it together.
Dude, I feel like my brain is alive. I'm ready. I am ready.
It, man.
I'm excited. I might not be in studio, but I'm excited, my friend. Something has happened. Nashville, the freezing Nashville trees have lit something in me. It's wild out here. I'm a Nashville fan. Flew in on Sunday night. Nobody thought I was going to make it here for an event that got canceled because of, what's happening. But you drive around this city and every tree looks like a chandelier. They're all encased in glass. It's gorgeous. Like when like the light is out, they're like the trees are shining. It's really, really pretty. And but yeah, nothing's open, and I'm just here in a hotel hanging out with other people in my industry.
Oh man!
So it must be just this pent up like energy that I have for the show.
I was starting to worry about that. I was like, what if we have a winter event like this on February 19th to the 21st? And I was going into backup plan mode in case we do. But let's just hope we don't for the summit.
Dude, the lesson that I've learned here is that I have sick weather karma. Everybody was so worried about like everything getting shut down in Nashville. I showed up. It's been wonderful. It's just super cold and the city's not ready for it and everything, but we'll be fine. We'll be fine. No weather events.
More or less. I don't know if that's a good thing to brag about your karma or not.
It's the main lesson is that I have sick weather karma and everything's going to be fine for the summit, Greg. You're going to be perfect. You're going to be okay. What were we here to do today? I feel like I blacked out. All right. State of the Union, GC. We had, we had our show that you revealed your plan, how we plan. Honestly, one of my favorite shows that we've done just because I'm a business nerd and I idolize JWB. But more important, more interesting to our community is what are the comings outings of that plan, right? Like what is that plan? How do you put that into operation? And that's what we're going to go through today. You guys I call it the market outlook because I think this, more relevant to most people. It's like what you're seeing in the market is what's interesting to them. We're going to call it internally. You call it the State of the Union, and you present this to your team every year. Tell us a little bit about like when y'all started kind of like presenting a State of the Union and doing this. And like, is this the same presentation everybody just got at TMM a week ago? Give me a little like behind the scenes here.
Yeah. It largely is the same presentation that everybody internally at JWB was a part of a couple of weeks ago. I would say that the way that we have shared the comings outings of the planning process with our team has evolved over the year, and I just think it gets better and better. We have if I go back to like the early stages of when we started to plan. If I go back 10 or 15 years ago, like how did we relate that to the team? We focused as much as we could about making the best plan. And, somewhere along the way, we realized that it's not only making the best plan, it is creating an environment where the best plan is also received the right way so that it is understood. How do we connect the why with the how and the what? And so that's really evolved. And today, what started as business planning, really, as we talked about in the show previously, it's probably been a 6 to 9 month process to get us here, all through that business planning process. We locked ourselves in the war room for a week straight in October of last year. We produced the plan From there, it has been about sharing the information, and it sort of culminates for JWB internally into the State of the Union presentation. And so what we actually do is we fly in certain teammates that aren't even local here. We fly them in so they can understand and hear the message and be a part of such an important day for us. We take everybody here internally off site. So we went to a different location downtown. It's actually the Jesse Ball DuPont Center, which is for those who are coming to Summit. You'll see that at Summit. We're actually going to
It's
host
where
our
we
dinner there.
hosted Summit last year.
That's right. That's where we hosted Summit last year. A really beautiful building downtown. And we, of course, share the plan along with some other fun things that we're not going to have time to share on our show today, but we share our Teammate of the Year presentation. So Shay Lynn, who was our Teammate of the Year this year, was awarded, and everybody got to celebrate her, as well as a couple of other initiatives that are shared, things regarding promotions and other things internally that are just really fun to celebrate. So the entire State of the Union is kind of the culmination of it. It's turned into this really wonderful event that I think is a great example of not just the great plan, but making sure that it is the right environment so that people understand it and then are ready to go and kick butt and start implementing.
Love it. Love it. All right, let's get into it, man. Here is the I'm make sure that I'm showing the right thing here. Yeah,
There we go.
2026 State of the Union presentation. This is JWB's own internal kind of like plan. This is not investment advice. We're just sharing you what we're doing over here. Do your own due diligence and anything else that I need to add into this slide here.
Nah, you nailed it.
Cool. All right, let's talk with acquisitions, GC, right? So you kind of just so everybody knows, we're basically going to go through the different stats of like what JWB is planning on doing this year. And Greg and I are just going to talk about why that's important and how they come up with this type of stuff, right? So 2025, you purchased 107 properties. You are ramping it up for 2026. You're buying 191 properties. Of those, you believe that 100 of them will be sold to retail, people that are moving in there, owner occupants, and 91 will be sold to turnkey. Tell me kind of like, I mean, you guys, first of all, you're almost doubling the amount of properties that you bought from 2025. What's the thinking there?
Mm-hmm. Yeah, I mean, the first thing is what we've been communicating for the past year. And we talked about how we think this is a great time to buy. We see buying conditions continuing to be improving. And so we think it's a great opportunity for us to go ahead and buy more than we did last year. Now, truth be told, we can buy a lot of properties. You know, at our height, we had been buying somewhere between 700 to 900 properties a year. And the bigger thing to leave with everybody is we did that intentionally to stockpile inventory. So that is what turns into a turnkey inventory for all of our clients as demand presents itself. So we basically have this stockpile of land that we then build out based on the number of sales. And so we think it's a great time to buy. We look at how many properties are we going to sell this year? How much do we have in inventory? And there's a certain kind of minimum that we want to buy just to maintain our presence in the market. So when we combine all of those things, we look at that number of 91 turnkey properties, and that's kind of how we get there. It's a combination of all of those things. The interesting thing to note is the retail side of the business. We don't talk a lot about what we call the retail side of the business. That is where we buy and sell in the same neighborhoods as we have investment properties, and we sell those properties to owner occupants. And so we're going to buy 100 properties this year, and that inventory is less easy to stockpile, let's say, or it's less easy to build out and stockpile, let's say, right? When you build a home to sell it to somebody, you can't rent it out. So that inventory is a little bit what I would call more urgent inventory for us to purchase. We can plan ahead a little bit more and build out homes on the investment side, on the turnkey side, because if the demand is not there to buy the home that year, we just rent it and then it pays for itself and we're in a good spot. On the retail side, it's a little bit more opportunistic for what the market is giving to us. And we need to go out there and buy those homes so that we can then turn around and sell those homes in that calendar year and generate that income.
Yeah, that is an interesting part of the JWB business model that we've spoken about in the past. It's the fact that your usual inventory, meaning turnkey properties that are cash flowing and performing before you even go to sell, is an appreciating asset that works for you and pays you already. So like your general inventory of like turnkey properties is something that y'all can kind of just like overshoot it if you want. It's still going to make you money. It's no problem holding on to these things. They're great investments, and you can always kind of like sell it to another investor. Now that you are filling this need, you are purposefully also, like going into this retail space, you recognize that Jacksonville is growing at a certain rate. There's a shortage of inventory. There's a need to be filled for a city that's growing at a certain level. So you're introducing new inventory that behaves slightly different now, right? Like this is not something that you can hold on to for 6 months and not sell. It's stuff that you want to move, relatively quickly. It's a new wrinkle of operational kind of like prowess, but it's also a sign of you are betting on the fact that there's just more demand out there than there is supply, and you're there to fill it to a certain extent as well because the city's growing, right?
Well, yes, but the one thing that I would change the word, it's not new for us. We've been doing this for forever. I mean, we've sold hundreds of what I would call retail homes, right? Owner occupant homes. We've sold hundreds of those for years and years and years. So it's not new. What it reflects though is kind of how the vertical integration of JWB works, right? The way that we look at this is we are an organization that's built for whatever the market gives us. We just need to understand where the market's going quicker than most, so then we can just pull a lever a little bit. And so the lever here that we're talking about is selling to owner occupants, because there is a good opportunity for us to do that this year because of the population growth and because of everything that you just shared there. We see a buying opportunity and a selling opportunity on the owner occupant side. And so we're going to ramp up those land purchases so then we can build those homes out. In other years, the opportunity may have been completely investor focused, like back in 2020 and 2021, when we couldn't build homes fast enough to sell them to investors. Well, that's where our land purchases went at that time. And that's where our building operations went at that time to serve the investor base. So it's really not something new for us. It is a lever that we're pulling this year because it is a good opportunity to buy and sell.
Yeah, and I think we're going to talk a little bit more about this, right? But like to me, when I think of the significance of the State of the Union, when I'm someone that's trying to build my portfolio around rental properties that I'm assuming that JWB is going to manage until my retirement and is going to be there for a long time, what's really, really important is that you continue to be a diversified company that's allowing you to thrive when the market's up, when the market's down, because like you said, the vertical integration allows for pulling multiple different levers that can continue to not just guarantee that you make revenue, but you also keep feeding the beast that makes everything else work through the activities that are the same across all of the, like your hedgehog is making single family homes perform, and that hedgehog allows you, and like bringing them to market in a way that performs, that hedgehog allows you to then offer those like slices of those things in different ways that allows you to create a very stable environment for the team to stay there and thrive for a long time, no matter what the market throws at you, and continue to deliver similar returns year over year because you have the same team there, because you're not going through the wild cycles of real estate if all you're doing is flipping or all you're doing is renovating or whatever, right?
Exactly right. That is the
Yeah.
key to 20 years in this business for JWB, has been to build a business that is vertically integrated, that can take advantage of market opportunities as they come our way by pulling a lever, or to mitigate risk that comes our way by pulling a lever. And
Yeah.
that's really in essence what we do.
Love it. Love it. All right. So let's talk about new construction homes, GC. You built, so way up on land acquisition, right? But in 2025, you built 338 homes. Now you're going to build 220.
Oh, Pops, you got the old version of the slides, buddy.
Did
Remember
I?
that one's 330. That one's 330 for homes built.
Then I've got the old version of the slides.
Usually we go through the slides like right before every show just to make sure that we got the right version of the slides.
Okay.
We didn't do that this time.
All right.
But there we go.
So you built 338 last year. You're going to build 330 this year.
There you go.
What is the significance of that?
So when we look at how many ultimate sales are we going to have from our investor demand and from our owner occupant demand, we go backwards or work backwards, and we say, okay, well, how many homes do we have currently built in order to satisfy that need? And then how many do we need to build in order to satisfy that need? So as you'll see coming up in a couple of slides here, you'll see the amount of homes that we expect to sell, and it's very similar to the amount of homes that we expect to build this year. And then, you work yourself backwards and say, well, how much do you need to buy? And then before we figure out how much we need to buy, we figure out how much do we already have in our existing inventory. So we do have a lot of land that can be sold on the investor side. And as we talked about, we need to fill the bucket of land on the owner occupant side as well. So it kind of works its way through the production cycle. You start with how much are you going to sell, and you work your way back to how much you need to build to do it. Make sure that you adjust the timelines according, and that's how you get to roughly 330 builds last year and roughly 330 builds this year.
Got it. And I'm jumping ahead a slide, right? But here's you had around 300 last year, 330 last year. You sold around 330 as well, right? Like you had 300, you have 330 for this year. You plan on selling 325. Out of that, 69% of it is going to be turnkey. Talk to me about these sales of PMC doors, right? This seems like another kind of like stable year. You're going from 276 to 300.
I'll talk about that in a second, but I do want to point one thing out here is the percentage of the sales.
Oh,
so
yeah.
those 329 sales last year, closed sales, were a combination of what we call retail, owner occupant. We're just going to call them retail from now on going forward. You know what I mean? Retail sales and the investor sales or the turnkey sales. So about 59% of our sales were to investors or turnkey last year. We expect to sell about the same number of homes, but we expect the investor demand to be stronger. So we expect to sell 69% of homes to investors this year. So kind of like what we're talking about, we see in conditions for investors to be able to buy properties improving this year. And that and a whole lot of other good things that we're working on. We expect sales to go up on the investor side. So we expect to see slightly less retail sales in 2026 than we had in 2025, even though we see the market as opportunities there. And we're buying in advance today to make sure we can satisfy the need for those sales in 2026. And then also to make sure that we're set up for 2027 to be able to sell on the retail side.
Makes sense. So more investor homes as a percentage of sales, even though you're ramping up that retail side as well.
Yeah, exactly.
Cool.
And we kind of work there. There's the levers in play there. There's the ramping up, right? What percentage, how many are you going to sell? What percentage is going to be sold to this type of a client and whatnot? And you adjust accordingly. 276 PMC doors. I'm sure that means nothing to everybody, but I just wanted to share with you what we shared internally here. So not many people are aware of what we do outside of selling turnkey properties, but we also take on property management for clients that do not buy the properties with us. And internally, we call you PMC, property management clients. So we brought on 276 PMC doors last year. That means that clients who didn't buy the properties with us asked us to manage their properties. So that's what we did last year. And then this year, we expect to see a similar type growth. We expect to have 300 new properties under management from clients who did not purchase those homes from us.
Got it. This idea that the investor side of it is going to be greater than the retail side of it from a proportional standpoint. Where does that assumption come from, GC? Is that I guess where does that assumption come from that there's going to be more investors willing to buy more turnkey?
I think it's a part of market conditions, so call it macro factors. We see some market conditions improving slightly. We see slight relief on the interest rate side. We've already seen slight relief on the interest rate side. That clients right now, when they're buying turnkey properties with JWB, their interest rate is 4.75% is what most clients are getting right now. So to be able to buy an investment property and be under 5% for your interest rate is great for your cash flow, great for your mental psyche to know that lower interest rates are once again possible. So all that comes into play. And then
people right now are able to buy with less money down and have more cash flow happening. And that makes it just an easier decision for people.
Yeah. I mean, macro wise, we went from selling I think it was like 550 properties in 2021 to investors when interest rates were rock bottom, and then from 2023 and 2024, it was, I can't remember what the numbers were, but it was a lot less than 550 that we sold. Nothing changed. As far as the team or the investment or whatnot, interest rates changed. And that of course suppresses investor demand. So now that we're on the other side of this and we see interest rates starting to come down again, we expect increased demand in 2026 versus what we had in 2025. And that's from a macro perspective. There's a lot of really strong strategic partnerships that we have that we expect to drive more sales in 2026. So we have some key partners at Summit. You'll be meeting one of them as well, our Wealth Outside Wall Street partner is just a fantastic organization. We have a number of other affiliates, Fortune Builders being another affiliate. We have a number of affiliate partners, and they're expecting increased activity as well, which will lead to additional investor sales.
Cool. Interesting. All right. So something that is adjacent to this is your leasing, right? In 2025, you had 1,588 move-ins. 2026 seems to be a whole lot more move-ins, but there's even more. Oh, actually, about the same. I guess slightly lower, but like now you're breaking it up into a couple of different asset classes. You want to tell me, kind of like talk me through this slide here, GC?
Yeah. First of all, holy cow, 1,600 move-ins in a year.
Yeah.
Holy
Yeah.
cow, right?
Yeah.
I've been in like reminiscing mode as we celebrated our 20-year anniversary on January 6th. And then now we are moving into our downtown office next Monday. And so we are all kind of reminiscing and just loving on this place that we have been in for, since 2013. And so as I start to see a number of 1,600 families moved into homes, that is a world record for JWB. It is just such an incredible accomplishment by our marketing team, our leasing team, our property management team, the entire JWB team. So I just want to take a moment to celebrate that. It doesn't seem to do it justice when you just see an asterisk. That's what means a JWB world record. It doesn't seem to do it justice, but that's what that means.
I mean, it's an average of 4.35 move-ins a day.
Yeah.
That's a massive amount of human movement.
And you're responsible for setting up housing for somebody. It's not like
Yeah.
selling 4 widgets a day,
Yeah.
right? It is the home for our residents. So incredible accomplishment, and super excited about what we accomplished in 2025. The way the numbers shake out in 2026, we're going to have a similar number of move-ins. So that 1,497 is how the numbers shake out. As far as how many homes we will move in to accomplish our goals. But yes, I broke it out a little bit here because that's going to play into some of the exciting things I'm going to share with you that are coming down the pike for JWB. We're getting more intentional about understanding and I would say breaking out the single family versus multifamily parts of how JWB property management operates. And so I thought it'd be insightful to share that with you. Out of the 1,500 move-ins we expect in 2026, about 1,200 of those will be single family, and then about, call it 300 will be multifamily. You put it all together and it averages about 29 move-ins a week.
Amazing. Tell me more about multifamily, Greg. Like, is this something like I feel like we've talked a little bit about multifamily on the show? Like the way that I understand multifamily is just like the amount of multifamilies that are in Jacksonville. Many of them don't fit under kind of like the profile of like neighborhood that you like to invest in. Is there like a new focus? Is multifamily moving into kind of like the neighborhoods that you're like managing? Like what's going on here?
Well, it really hasn't been that multifamily hasn't been in the neighborhoods that we want to manage per se. There are certainly multifamily in the neighborhoods that we want to manage. There's also multifamily in neighborhoods that we don't want to manage. The low income area is not an area that JWB plays in. So multifamily has always been a thing for us that we like. The reason why we don't sell a lot of multifamily is because it creates a lot of challenges when it comes to the financing, to the appraisal process, and some of these other things. And if you're a turnkey investor, you're buying into this because you want this to be easy, repeatable. You want to know how much you're going to need to put down. You want to know how the loan is going to work. You're going to want to know that the property is going to appraise. And it just is a little bit more clunky on the multifamily side. So we've always really liked multifamily. We own a lot of multifamily ourselves in the neighborhoods that we want to be in, but we don't sell a lot of multifamilies to our turnkey clients. And that's really the reason from the client experience perspective. But a multifamily is something that we see as a big opportunity on the property management side for us to serve a part of the market that really is underserved. If you think about it, there's single family residential property managers, and then there's the big kind of commercial multifamily apartment complex type of property management, and they're very different. But there's nothing really in the middle that speaks to that investor and serves them really well. If you have a small apartment complex or a multifamily property, maybe a 8-unit or maybe up to 20 or 30 units, you don't really know where to go. Your single family residential property manager really isn't built to serve you. And the big guys don't really want to bother with you because you're not enough units under management. But of course, JWB was built out of the single family side, and we know how to operationalize that. We manage homes and small apartment complexes already, and so we see an opportunity for us to really serve the community for that small apartment complex multifamily space. Now, we also are really excited about serving larger communities as well. But a little bit of this is what's going on in our heads as far as getting more intentional about serving that multifamily investor the right way, being ready to serve the big apartment complex type of multifamily investor, or being able to serve the investor that we think is kind of most underserved right now, which is the small apartment complex multifamily investor. And so that's why you're going to see it in that slide and in future slides here, really getting intentional and breaking up both sides of the coin of property management between single family and multifamily.
Got it. I hear another spoke in the flywheel that allows you to add more value to the market and normalize the market and add more options for like these asset classes to continue to be developed and grow and fit in, like continue to keep up with demand while being able to like bring a different mix of price points to the market to keep up with affordability as well.
Absolutely. It from a big picture perspective,
Yeah.
it is so congruent as far as feeding the engine of JWB property management. It is slightly different, and we are intentionally making sure that we can present ourselves to the marketplace the right way to do that for the multifamily side, because it is slightly different than single family, but it is so close, and we've spent years and years and years and years learning how to do it the right way that it makes sense for us to go slightly outside of single family and really start to capture this. And just to give you guys an idea, this is not a new thing for us. We already manage over 650 multifamily units as we stand here today. So this is not new, but you're just seeing some more intentionality. And as you would imagine, when I start to share with you like what's going on in our heads, where do we see an opportunity? That's a growth segment for JWB. We see the number of units under multifamily growing significantly, and you'll probably see that in state of unions to come.
Love it. So close to 1,500 move-ins, but here's something investors love. 19,089 renewals last year, and we're looking at a total of 2,065 renewals. So looking at 1,681 in the single family at a 75% rate of renewals, and 384 in the multifamily at a 75% rate of lease renewals. Yeah, just tell me about this, GC. This is awesome.
We talked about how impressive it was to be able to move in 1,600 folks in a year. So impressive for those folks that move in. Almost 2,000 of those folks who moved in previous years said, you know what, my lease is coming up with JWB, sign me up for another one. Yep. To us, when it is hard enough to impress a client so much that they choose to do business with you the first time, and we love that. But when they come back and they buy something again from us, whether that's a turnkey property or whether it's a resident who says, I want to sign up for another 2-year lease or a 3-year lease, like that's that resident saying to you, you did a good job. Like I see value in being with you. And like that, that's something that we love and it's something that we celebrate. And the great thing is that clients win. This is one of the very best things that we can do for you as a turnkey client is to renew your home, because it saves $7,000, $8,000, $9,000 of cost that may be coming your way, but if they weren't renewed. So this is our secret sauce. This is our strategy as far as how our investor clients can win, is be really, really great at renewals so that we can have long-term resident stays. So almost 2,000 renewals last year, an unbelievable accomplishment for our property management team. Of course, as you can see with the asterisk there, a JWB world record, and something that I am just so proud. If you had told me 10 years ago, 15 years ago, when we started JWB, that we would have the opportunity to renew 2,000 leases in a year, I would have thought you were crazy. And then to know that our team accomplished it this year is just so incredible. So very, very proud of us.
So in these numbers, I see a couple of things, right? I see there's like just a big demand for people looking for housing, and then people staying in that housing and continuing to rent, right? Like that's happening. Something that I find really interesting here is the consistency of the 75% renewal rate from single family and multifamily. I was under the impression that single family, right? Like if I think about it, I'm a family, I'm moving into a house, it's like you're more settled. Whereas the multifamily renter is much more likely to have less stuff. It's much more likely to be there much more temporarily. Like to me, multifamily, I've always just assumed is more of like a 1 year lease kind of game. And keeping people inside of a multifamily is a different game than a single family, but y'all have the same numbers. Is it a different game? Is it just kind of like the market is just not giving multifamily the treatment that you can give in a single family? How are you able to keep that consistent? Or are my assumptions wrong?
No, so generally speaking, when you have folks renewing a lease, it's to the owner's benefit. Now, there's some slight differences between the single family mindset and the multifamily mindset. The single family mindset, long-term resident stays and renewing those leases is paramount. It always makes sense. It always makes sense because you're not so subject to the debt component, meaning like no matter what your lease rate is, you're still going to be able to achieve a certain amount of money that you can pull out in equity in that investment if you are cash out refinancing or something along those lines.
Mm-hmm.
So renewals always win on the single family side. On the multifamily side, it is a really wonderful thing that we feel like we can bring to the marketplace to bring that same type of commitment to experience for the resident that they want to renew to the multifamily side, because most multifamily property managers just don't really do a good job at renewing leases or putting much effort into it. It's just kind of like, it's just not a priority, but it is something that can drive significant value, especially for that apartment complex owner or that
Yeah.
multifamily, especially a small multifamily owner. So we see it as something that we can bring something to the marketplace that many people just don't know how to do in the multifamily space. Now, the one difference between multifamily and single family is sometimes, and this is more getting into the multifamily side. If a client has a value add multifamily deal. Let's say that they buy an apartment complex, they bring it to JWB and they say, hey, you know what? I'm going to put $1 million of work into this multifamily. And because this is going to be a brand new type of renting experience for that resident, the rents will go up over time. Well, then we need to make sure we work with that owner to make sure that we are not just always trying to renew with the rent increases that would be more standard with the market, because there's $1 million of work going into that building. And so there are some slight variations when it comes to the commitment and the strategy behind how you renew on the multifamily side versus the single family side. But either way, it is an underserved opportunity for investors. If you can work with a property manager who, given the right scenario, is going to focus on lease renewals, you can 100% win. And some of our strongest partners on the multifamily side, those who bring and have hundreds and hundreds of units under management with us, they love the multifamily approach of how we're able to get lease renewals, because they're like, all right, I already got my debt piece figured out on the multifamily side. I've already got the capital stacked the right way. Now I just want to maximize operational efficiency here, and lease renewals at a 75% rate allow them to do that on the multifamily side.
Interesting. Very cool, man. All right. So that brings JWB to a total homes under management from 2025 to 2026, really getting close to that 6,000 door threshold at 5868.
Yeah, we're getting close, man. We're getting
Yeah.
close. To think that we have the opportunity to serve, you know, it's 50, call it 5,800 homes
Yeah.
now, and it's 5,800 homes, but it's over 9,000 residents that we serve.
Yeah. Yeah.
And just to think about the platform, the responsibility, the awesome platform that we have, as we start to think about and get really intentional with things like the Homestead program, which I think we'll share on the next slide, we just have this opportunity to create so much positive in our community and to really change people's lives. And I think that's the thing that gets me most excited, and people on my team most excited, is the platform that we have.
Speaking of the platform, tell us about Homestead. 18 Homestead closes in 2025. We're turning it way up with 48 new homeowners created through Homestead in 2026. This is pretty impressive.
Yeah, we during the State of the Union, my business partners and we have a little bit of like a town hall. So it's the four of us up on stage, and
Yeah.
the team gets to ask us questions. And so one of the questions was, what do you think you're going to be known for? What is JWB going to be known for in the next 20 years? And one of the things that I talked about was this Homestead program, and the ability for us to help our renters become homeowners. and what it does for that family and what it does for that community, that neighborhood, but then what it does for all the indirect folks that are related, the friends, the other family members that are around that beautiful scenario of somebody going from renter to homeowner. What does it do? What does it light up in a kid and says, hey, you know what, I can do this now because I saw my aunt do it or whatnot, you know, like it's all of that. And then it's the ripple generations that it's the effect on those future generations. So I think what we are doing and the intentionality between helping our 9,000 plus residents become homeowners is one of the most impactful things that we'll look back on in 20 years and say, wow, we really made a difference. And so for those,
yeah, it's just amazing, man. Continue.
yeah, man.
Yeah.
It gets me pretty fired up. So for those who aren't familiar with the Homestead program is one of the best tools that we have to help our renters become homeowners. JWB, about 2 years ago, became the only property management company in Northeast Florida, maybe the only property management company in the entire country. I've yet to see another one that basically pays our residents to become homeowners. So every month, a resident who abides by the terms of the lease gets $100 a month. That goes towards their down payment or closing costs for their very first home that JWB will help them source. And the greatest thing is that it doesn't even have to be a JWB home that they purchase. So this is an example of a property management company literally paying our residents and helping them to become homeowners. And we do that because the resident wins, the owner wins, and JWB and our community win along the way. So we had 18 Homestead closings last year. That means 18 renters of JWB became homeowners. And this year you can see the intentionality behind what we're doing. Our goal is to have 48 new homeowners created through the Homestead program.
Amazing. We talk about it all the time, this idea that JWB, as an investor in JWB, I feel like there is, there is leverage to what JWB does that adds value to the property I'm investing in outside of the property lines, right? Like the investment in downtown is a big example of this like economic flywheel that JWB is investing in. To then make the connection of, man, if we are going to try to raise median incomes out here, the number one thing that you can do to plug people into that economic flywheel that we're working on is to help people transition into home ownership so they can own a piece of this economic flywheel that we're investing in and to continue to raise like the tide for all boats. I think it's such a grand like vision and execution. And it's really impressive, man. I just think it's so, I don't know. You just don't hear about this from most developers that are, building $1 billion development in downtown to then also be thinking about, I'm also trying to turn workforce housing renters into homeowners, man. It's really cool.
We sit in this unique seat. We're at the intersection of all of these good things that we can impact between the investor, between the resident, between the community, between downtown. We are there. And so we have different stakeholders than the normal developer has. And we've got to figure out a way to do right by all. And Homestead is a great example of that.
Yeah, love it. All right. And then JWB Cares, right? So there's Homestead and there's JWB Cares. How would you describe the difference between these two, GC?
Well, JWB Cares is our charitable arm. So we raise money every year with the intention of choosing a very small select group of folks to be able to benefit directly from whatever that charitable endeavor would be. Homestead is a part of JWB Property Management. So every resident who rents with JWB can take part in the Homestead program. It's free for them. They just sign up and they start earning $100 a month. To be able to do that, there is a max of a $3,600 cap on the amount that they can earn as through the Homestead program. And that, of course, all is paid by JWB and goes towards the purchase down payment or closing costs. So that's the JWB Property Management arm of Homestead. JWB Cares is there from a charitable perspective. And every year we have raised more and more money. And it's a big thank you to all of you who are here, right? Many of you donated to JWB Cares. Together, between you, between our team, between our community partners, we raised almost $160,000 in 2025. That meant that we got to welcome in 8 new Welcome Home Fund families through JWB Cares. As a Welcome Home Fund family, you get right around $20,000 of down payment assistance that you get from this endeavor. You can then add your home step on top of that as well. And so what's happening is we have 8 new families that are purchasing homes now. We just had our first one close, and they're bringing $0 to the table. $0 to be able to buy a brand new home. They were a resident with JWB. They then, impressed folks so much that they were selected to be recipients for the Welcome Home Fund, and now they are owners of a home, and they didn't have to bring any money to closing. So it's incredible. We expect to do the same in 2026. We're going to ask for your help as well. I'm going to get on a future show and ask you to donate. This is where it goes. So thank you for everybody, and I hope you continue to support the mission. And overall, we total up the numbers. Together, we have raised over $1 million to help to be a part of the solution for home ownership and to solve the affordable housing crisis.
I feel like I say the word flywheel all the time. And I'm like, I find it so impressive how everything that JWB stacks on itself strategically, right? Like Homestep to JWB Cares is another kind of like acceleration of a flywheel of good you can do when it's like you start off by gifting people homes that has a limit, right? Like of how many people you can help. If you can then start helping people save for their own down payments, that you can help more people with that. And if you can combine the two of like saving for your own down payments plus giving people gifted down payments, now it's like this like real kind of like flywheel effect that compounds on itself, that we see it in other parts of the business, but even in the charitable endeavors, it's just like, I don't know, man, it's really cool. It's really cool to see this. It's awesome. And then we've got, speaking of flywheel activities, JWB Business Ventures. This is kind of like we talk about this, we have talked about this less and less on the show, right? But JWB has a R&D department that leads to new ideas that add to kind of like the overall, that more spokes of the flywheel as they come out are different ways to either add diversified revenue, diversified insights, operational prowess that de-risks things all the way through the system while adding more and more opportunities as well. What are these 2 new ventures, GC, Elevate Communities and PMs in other markets?
Absolutely. We'll talk about Elevate Communities first. So as I was sharing along the way, we are getting more intentional about the 2 different sides, let's call, of property management, the single family arm, the multifamily arm. Well, we are branding our multifamily arm of JWB Property Management. We're branding it Elevate Communities. It seems to be more representative of the type of communities that we're going to be able to serve on the multifamily side. And so there is a branding component of it, but there is an entire staffing component that is being built out as we speak. The entire marketing, the entire cost structure, the way that we serve our multifamily owners is, I think, going to bring even more value than we have over the years as we served our multifamily owners. And so working with some of our biggest and best multifamily owners right now to help to create Elevate Communities and do it in a way that brings a tremendous amount of value. And so we're excited about it. So Elevate Communities is the multifamily arm of JWB Property Management.
Love it. So that's Elevate Communities. And now there's also purchasing property management companies in other markets. Is this a sign that JWB is moving into other markets? You see, explain that to me.
No, not at all. Not at all. As I've shared many times, we have purchased 6 property management companies over the last 3-4 years-ish or so. And as you can see, we look for ways to feed the engine of property management, right? Feed the engine of units under management. It's a good thing for us, for our business, and for our clients, and for our residents, and all win. So every path to feed units under management is a good path for JWB. You see different ways that we do that. When we sell turnkey investment properties to you, who's the property manager? JWB Property Management, right? And so on. And when we work with clients who don't purchase with JWB, we do ownership for them. Those are properties under management for JWB Property Management. So looking for ways to, continue to feed that engine. And those 6 property management purchases that we've made over the years, again, are another way of us feeding the engine. So we're always kind of looking there. Well, as I shared in the video that we did and in the show that we did that Denny recommended, a month ago or so, one of the lessons that we had to learn is like, how much is too much for the team in order to buy other property management companies? And for those property management companies that we purchased, We, in essence, buy the contracts, and then we integrate those clients and all of the residents into normal JWB operations. And so the work falls on JWB internally, and we're happy to do it. But how much is too much, right? We have to be very cognizant about those types of opportunities, because we cannot, you know, we can't redline the
Yeah,
team,
yeah,
right? We
you can't
can't gas it
overburden the
too
team.
hard,
Yeah, yeah,
right?
yeah, yeah, yeah.
So we're very cognizant about that. But we love property management, and we love adding units under management. So the
Yeah.
first idea was,
And you
well,
have clearly proven that you know how to run a property management company that gets elite metrics,
yes,
right? Like that is
exactly.
you guys have a system that really, really works.
Exactly.
Yeah.
Exactly. So it is our bread and butter. We know how to do it well. We understand the business. And so we're like, well, how can we continue to add units under management without, putting a team in a tough spot? And that's where this idea started of buying property management companies in other places, in other parts of the country. And so we went down that path. The other thing for us was we love learning. And for the property management companies that we have purchased, we learned a ton from them. We took
Yeah.
some things that they were doing well, we integrated into what we're doing. We looked at
Yeah.
some of the things they were doing, and we said, we ain't never going to do that. We are definitely not going to do that. And, but that learning process, we think that there's just an added ancillary value to that. So the idea of buying other property management companies serves that need as well. We like to be the dumbest guys in the room. And the ability to buy other successful property management companies allows us to be the dumbest guys in the room quite often. And we just love that. We love that component of it. And then the last part of it is just enterprise value for JWB. When we own, or when we manage, call it roughly 6,000 units all in one market, that is great. And there's a certain enterprise value. But if we expand to other markets automatically, if we do the same amount of business, then our enterprise value for our organization goes up. And so, as an organization, you always want to raise your enterprise value. If it's done in a responsible manner, that's good for your clients and your residents. And we look at this and we say, well, this is one of those ways that we can do that. So we do have plans to be able to purchase a few property management companies this year that are outside of JWB. Changes nothing for you as an investor. And in fact, a very small part of the JWB team is going to be in charge of those external operations. Those external operations are going to stay external to JWB. JWB, in essence, is call it the parent company. But those operations are purchased for a reason, because they're successful, and they're going to stay successful with the leadership in place in those organizations. So it allows us to do all those things that I mentioned, continue to add units under management, and protect the team so that they can protect you.
This is like another example to me of like why I make the leap of like JWB thinks more like Amazon than like the typical kind of like real estate company, right? Like Amazon at the end of the day realized that, their giant cloud infrastructure space is something that everybody else needs, and they do it as well as anybody in the world. And nobody thinks of Amazon as a cloud provider company, even though it adds an insane amount of enterprise value, recurring revenue, infrastructure leverage. And for you guys to just continue to diversify the income streams by bringing in, like investing in teams that already have operators that you can have like a small part of your leadership managing remotely, but also being able to leverage the know-how of each of them, to like implement into your operation, implement into their operation, continue to increase cash flow in ways that just make the business more stable in good times or bad, and increase enterprise value for the financial viability and lending and all the different things that, that adds to credibility. You just continue to like, I hate to call it building a Death Star, but like you're just building this like very fertile ecosystem that it has so much like internal momentum and leverage and diversification, and like everything fits so well that it's like building something that, this is how you mitigate risk, is like building all these interoperating things that feed each other and build momentum. And like you get to a point where no one little thing could break, and everything else is just going to continue to like, its momentum around it bolsters it. It's incredible, man.
Yeah, I think out of what you said there, you said it fits so well. I think
Yeah.
that is the real key. It's got
Yeah.
to fit so well.
Yeah.
And that doesn't mean that the numbers have to be a certain thing for us to go after or whatnot. It's got to fit. It's got to be the right time, and it's got to fit. So that's really what we look at. And, celebrating our 20-year anniversary, looking at the things that we get to do today versus where we were 10 years ago, they're bigger and there's more zeros behind them and all that good stuff. But it's the same type of thing that we have really tried to do, is to protect our hedgehog, our core, protect our clients, right? Create great opportunities for those, but always have an eye for what's coming next,
Yeah.
and to do it in a way where it's with our own money, do it in a way that does not disrupt daily operations, but we're prepared for that next step when it's here. And so for now, these are a couple of the next steps that are here today that have been worked on for years and years and years and years and years. So I think that combination of focus on what is really important today. What fits though? What could be the next thing that we always have, that we're working towards you've seen that now for 2 decades.
We're going to go into a summit preview now, but before that, I want to put a button on this. This is the outlook of the market, the moves that JWB is making, the state of the union. I look at a outlook that you just presented to your team, and now we're presenting externally to our community and anybody else that's interested in knowing about it. That looks like diversified growth and like purposeful kind of like investments into an already working system. When I think of like what the plans that are coming out of this State of the Union are telling me, is that you believe that the State of the Union is strong and you are making these like high leverage kind of like expansion plans into different parts of what you already really do well that can now support other things, and the foundation seems to be growing and diversifying and building a whole other kind of like layer of real estate kind of like prosperities, feels like.
I think so. You mentioned leverage there, and to me, it's the right type of leverage. It's
Yeah.
leveraging the things that you are already great at,
Yeah.
right? Looking for opportunities that are congruent to those.
Yeah.
And, I think that's how you get ahead. You look at what you're built to do and you look for opportunities to be able to expand on those types of things. And you're seeing a lot of that in different, not just in the new things that we're doing, you're seeing a lot of that in the things that we're already doing, right? It's leveraging what this model and what this team can do for you. Ultimately, that's the decision you make to invest with us. You're leveraging us, right? And, and we're able to leverage our platform, our resources, how great we are at the things that we do well, and then go and leverage that in some new and exciting business ventures as well.
Rhett Farber calls it intentional flow. I like that. For me, it's like when I would think of the average company doing the things that you're proposing right now, I would think, man, these are big Hail Mary initiatives. And yet JWB's been doing this stuff just very incrementally. And like you can be doing all these different things. It doesn't feel like it adds a whole lot to, like, it feels like a very small sliver of these things, but they're all big things all on their own. But based on the capacity where you're at, it's just kind of like a drop in the bucket that is part of this like massive momentum that you've built. Really cool.
Yeah. That's by design, right?
Yeah.
That's why we do it this way. The team is working in that direction to be able to serve you, right? There's an eye for what's coming next, and we'll always keep our eye there.
So let's talk about Summit GC, right? So on the back of this idea that like there is this flywheel of momentum happening, JWB is celebrating 20 years. This summit is really more than anything a reestablishment of what this has become, right? Like I think as we look at over the last 5-6 years, there's been a lot of like really interesting things that are happening in the right here and now that are once in a lifetime things. I think when we think of like a 20-year celebration of like where this asset class is today, where this company is today, where this community is today, and where the city is today, that is what this kind of like new rite of passage, coming of age of like what we're headed into in the future here as not your average investors in Jacksonville. You'll see like the summit flow is all meant for that, right? Day one, we're going to get here we start on Thursday at 3:00, and day one is what everybody came for. Number one, let's knock out the number one most important thing that everyone came for. Everybody here wants to see each other, right? Like day one is We're going to show up to the JWB World Headquarters. You're going to meet everybody. You're going to get a tour of JWB World Headquarters. You're going to get like an understanding of it. And then we're going to go into like a happy hour, networker, icebreaker activities. Just get to know each other, understand the lay of the land, see the building, get comfortable. We're also going to have some cash flow games that we're going to be playing. So some people will be networking and hanging out. Other people, you can sit and play the cash flow game together, build those bonds, go through that experience. Day 2, you're going to show up at, again, JWB headquarters, 9 a.m. in the morning. GC and I have a keynote that we are working on that is going to set this new vision, where this asset class is. In the 20 years that JWB has doing this, the profile of a single family rental home in Jacksonville has always had really good floor and really good upside. Today, that floor is higher. That upside is much more closer and much more tangible, and you can see it. And the JWB as a business unit and Jacksonville as a city has evolved. So we're going to set what is the new normal of today after 20 years. After that, we're going to do something that has never been done before. JWB's 4 partners, Greg, Alex, Adam, and Adam, open town hall with the JWB community. Just going to spend an hour, talk about the history, talk about any decision that you're curious about. You're going to get to know all 4 of them, not just GC and not just Alex. Everybody's coming, and it's something that it sounded like you guys do this every year with your company. It's the first time we're going to do this openly to our community, right? So that one's going to be really, really awesome, followed by the questions that everybody always has. Everybody always wants to know about insurance. They want to know about lending, and they want to know about estate planning. We're doing another 1-hour session with our partners that are do insurance, Whitney Ritchie, lending, John Siebert, and estate planning, the McKillop group, and open town hall, ask your questions, talk to the experts, right? Like find out what other people are doing and hearing their questions answer around these things that everybody always asks questions around. And then it's going to be the most important part of the summit, and you're going to have an intentional meeting with your portfolio manager, right? Like most of us, if you're like me, when I meet with my portfolio manager, I'm trying to squeeze them into my workday, in between meetings. My wife Marta might be coming from 2 other meetings as well. We just come together in one moment to just see what's going on. This is intentional time you're going to have understood the new normal of where the market is now. Time to and ask your questions around where it's headed and like the different things that a lot of people have questions about. Then you sit down with your portfolio manager to understand your new normal. You've been investing with JWB for 14 years. What does life look like right now? What is an experience? You've been doing it for 2 years. What does life look like right now? Let's get an update of exactly where you're at in your new normal. And that's going to be followed by our only other keynote presentation, Ryan Lee from Wealth Outside of Wall Street. GC, give me the cliff notes of that presentation.
It's only a few times where, I see another company and I'm just blown away by who they are, what they speak about, what their product and service is, and how it aligns so well with what we believe and with turnkey rental property investing. And I got to know Ryan. It's been over a year now that I've been working with the Wealth Outside Wall Street group. They're a fantastic organization. And so Ryan's the first time that I'm going to invite somebody else onto our stage to share his vision. And then again, how it matches so well with turnkey rental property investing. It is something that I'm extremely excited about, and I'm excited for you guys to learn and to listen. And if you guys want to know how deeply I believe in it, I'm a client. I'm becoming a client with Wealth Outside Wall Street as well. So I believe deeply in it. And it's the first time I'm going to allow somebody to come onto our stage and share it with you, because I think it can really help.
Greg, I don't know if you guys understand how overprotective Greg is of the community.
Yes.
So yeah, I'm excited to hear about this. I got the book. I feel like I should make a point to like read the book for the thing. But anyways, I'm excited for that presentation. And then after that, y'all, we're getting back together, right? Dinner, cocktail hour, awards, right? Like we're making it a tradition, these awards that we like to do. We're going to do all that. That's day 2, all about kind of like your investment journey. And day 3 is all about Jacksonville. Day 3, we are starting at 9 in the morning with the mayor of Jacksonville. Donna Deegan is coming to talk to us personally. After that, we're going to have a panel with the mayor, with Alex, with Jimmy Peluso, who is a councilman here, who's spoken, has been on our panels before, super energetic guy, and Colin Tarbert. I'm less
On
familiar with Colin. Who's Colin?
Colin, and he is the brand new CEO of the Downtown Investment Authority.
Nice.
So we've had Lori Boyer on our show and at our summit before. She was the previous CEO of the Downtown Investment Authority. But if you want to talk about who is really designing all of success in downtown, the Downtown Investment Authority is incredibly impactful. So Colin is the CEO, and so we're excited to have him.
Love that. Right. So then panel about the mayor, panel about like the people that are doing the things, the leaders of downtown, giving you the vision. And then we're going to go look, touch, feel it. We're going on the downtown tour that, if you have been here, if you have come to a past summit, like you have seen downtown progress. We are now at another level where like things are coming out of the ground. It is so obvious. We're going to see the JWB, the Pearl Street District, and all the stuff that's coming out of the ground. And it's going to be really, really awesome, starting at the building. And then throughout that, then lunch. And then we're going to go on a live JWB Rental Property of the Week. We're gonna go actually do a live rental property tour, so everybody can see the asset, look, touch, feel it, and then of course we all get together again for a final send off, final party, and unofficial karaoke. Jen, I owe you a call back so we can set up the karaoke night. But yeah, so that's the whole event, right? Like you are going to see what the new normal is. You're going to see exactly what's happening on the grounds. You're going to meet the movers and shakers, and more than anything, tons of quality time with the community, with each other, to find out what each other's doing, how you are planning your retirement, get to know each other better, and share strategies and all that good stuff. How'd I do there, GC?
I think you did great, man. You didn't even take a breath. Good job.
Well, want to do the preview. So back to but I want to just kind of like, you want to give a couple details, GC? I know,
yeah.
Somebody was asking about, Rhett was asking about, is there, what will parking details be sent out before summit or attendees? Give me some of like the logistical stuff that you wanted to share.
Yes, we will be sharing parking details. There are parking garages that are very close to JWB's headquarters downtown. So it'll be a short walk. We can send that information out. What Pablo is looking through right there is the places to stay. So we shared the hotel recommendations a while ago. We also have short-term rentals. These are actually JWB owned short-term rentals. And so those are available on the site there. JWBRealestateCapital.com/summit is where you get all this information. But if you want the true JWB experience and stay in one of our short-term rental properties, you can just click on one of those links and reserve your spot. And you do get a 10% discount off of any JWB listing if you use a certain code. So we hope that you guys enjoy those short-term rentals for us. Let's see, what other questions do we have?
So where to stay, we'll send out stuff about parking. Dress code is, just be comfortable, right? We're going to be walking around on Saturday. So you might, like, depending on the weather, you're probably going to want to bring a layer at that point in February and some comfortable shoes for Saturday. Friday, we're going to be indoors most of the time. So just as you wish, but we want you to be comfortable. Meals are going to be provided, right? Like once you're there, basically lunch and dinner, we're going to be together for those things, right?
Yeah, you'll have lunch provided on Friday, and then you'll have dinner provided on Friday, and then Saturday you'll have lunch provided. And then we have the happy hour send off on Saturday. So Saturday dinner is on you, but everything else that I just mentioned there is on us.
Got it. Anything else, GC? Any other logistical questions?
Common question is, will I get to see my JWB properties? Yes, we can arrange that. First thing to keep in mind is that there is a resident living in your home, and nobody likes people to run up on their home unannounced. So what we would ask is, if you do want to see your home, please contact us, talk to your JWB portfolio manager, and we can arrange that. We do want to let the resident know that would happen. I'm not going to be able to get you inside the home, but as far as just driving by and seeing that, we would just like to let the resident know that will happen, because we don't want your resident to have a less than ideal experience, because ultimately, that'll come back on your investment. We don't want that. So please reach out to us if it's something you'd like to do. And then that's why I'd recommend getting in Wednesday night. If we can coordinate it, then you have, the morning on Thursday. If you'd like to drive, go see your homes, that would be great. And then you can be there for the start of the festivities, which are Thursday at 3 o'clock. You're not going to want to miss anything from Thursday to Saturday night. So the other alternative would be, earlier than Thursday or maybe Sunday, if you wanted to fly out late on Sunday.
Awesome. Awesome. I'm so excited, man. I'm so pumped. Like as this, I'm here in Nashville, group of property managers, and I was just in there meeting with them. I was like, I wish you all could come see this. I wish you could all I wish I could invite other people to see what it is possible to build a community of real estate investors in an exciting market and the stuff that we're doing and to be able to see the before and afters of all this impact. I'm so pumped for this, man. It's like it's my favorite 3 days of the year.
You know what? I am so pumped. I'm pumped from many different angles. I'm pumped that we're all getting together first and foremost. I'm pumped that this is the fifth iteration of this. So those who have been coming for 5 years, you're going to be blown away. It's like you were there when nobody else saw it happening, and now you can really see it, and you see and you hear people around Jacksonville saying, "Oh my gosh, things are happening downtown." Well, you saw it first 5 years ago, so you're going to have that really cool, proud moment. I'm excited that we have the mayor and we have the panel that we have. Where else do you get the mayor to come and spend time with 100 folks in a room?
Yeah.
This is going to be a truly, truly incredible opportunity. Pumped to spend time with my business partners on stage with you guys. It's always a special moment. We haven't had the opportunity to do that at Summit before, so I'm excited for you guys to get to know them as well as me. And then, I'm really excited for all of you to be able to sit down with your JWB portfolio manager. If you think about this, a lot of other important teammates that you have, your CPA, right? Maybe your estate planning, right? Those meetings are really important. You typically have your financial advisor. You sit down once a year and you make sure that, number one, your goals are in line with the production of whatever that is, if that's the investment that you're managing. And you make little tweaks. Hey, listen, we should be doing this, or something changed in my life, right? This is what we get to do, and we do it normally, through Zoom. Well, think about this as that time that you get to sit down and your portfolio manager is totally focused on you. We'll give you a clear outlook of how your investment is performing. We'll talk to you about how much equity you have in your investment. And if your goals align and we say, well, geez, we can move it from here to here and we can get you to your ultimate financial outcome in half the time, those are the type of outcomes that'll come from that conversation. So I am super pumped that that is a part of it. What you will want to do, everybody has an opportunity to sit down with their portfolio manager. What you want to do is just be proactive about choosing the time slot, because it's a 2-hour time slot that everybody's going to sit down. We're going to have all hands on deck to be able to meet with everybody. But what I would recommend is to go ahead and contact your JWB portfolio manager and just say, I would love for it to be this time. It'll be X time on Friday, or it will be this time. And they'll share the opportunities and time slots that we have so that you can sit down with your specific JWB portfolio manager and really, I think, put everything that you're learning in this weekend together to make sure that you can maximize it. So I'm pumped, man.
It's going to be awesome, man. It's going to be cool. I really enjoyed this State of the Union, man. I like that, how it led perfectly into this preview of Summit. It feels, I don't know, feels like we're headed into a new normal as far as this asset class, and less kind of I don't know, less fluff and more just, this is what we signed up for, right? Consistent, upside, stuff that we can believe in, stuff that we can touch and feel like we're making a difference in. And it's all just a beautiful picture of being part of this GC.
It is. It is a beautiful picture, brother.
We are 13 minutes over. We had almost 100 people on today. And I just, this community is what makes it special. Thank you for spending all this extra time to listen, to be curious about the State of the Union, to be curious about what's coming up for Summit, to come to Summit, to hang out with us, to take an hour plus out of your workday on a Tuesday to come and get educated, get connected, learn about real estate, figure out how to own your financial future. I can't wait to see everybody at Summit. And from now till next week, GC, any pieces of advice?
Don't be average.